Good morning, everybody. Welcome to the latest episode of Talking Ball. It's the 17th of June. I'm Joe, joined by Steve and Jamie. Good morning, gents.
Good morning.
Good morning.
Can't believe we're nearly halfway through the year.
Yeah, it's mad, isn't it? It's
Halfway,
flown by.
When
Huh?
is it? End of the month, isn't it?
Yeah.
Yeah,
Crazy, isn't it?
Mm.
it certainly is. In for a bit of a scorcher today in the UK. Temperatures up to over 30, which is a bit of a rarity. Don't know what we're
Yeah.
going to do
Bit
with
too hot.
ourselves. Probably complain a lot.
Yeah, I've already started
Sweat and
complaining.
complain.
I was complaining yesterday when it was 29. I thought I was just walking down the street and it was just the air was so thick, and I thought, you know what, prefer it when it was cold. So
Yeah, absolutely.
it's
I'm with
a
you there,
classic
mate.
English thing to do, complain when it's not the exact perfect temperature.
Yes, indeed. Okay, so plenty to talk about. It was another wild session yesterday. Lots of volatility around in the markets and a few factors that have been causing that. So let's get to the latest headlines and run through those before we get stuck into the charts. So probably the main news yesterday was the Swiss National Bank in their shock move with a rate hike. They increased interest rates by 50 basis points to minus 0.25. So it still costs you money to hold funds in a Swiss bank account. That was the latest policy meeting yesterday. That was contrary to consensus forecasts. And obviously, when we get these moves that aren't expected by the market, that's when we can see pretty large moves. So we saw a fairly chunky move on a lot of currencies linked to the Swiss franc. I think 2 to 3% in some instances, which you don't often see with currencies. We also had Bank of England with their latest interest rate decision. There was no surprises there. They increased interest rates by 0.25% to 1.25%, which was very much in line with the consensus forecast. It was also the fifth successive increase and the highest interest rates that we've seen in the UK since 2009. There were a couple of dissenters looking for a bit of a higher rate hike. Three members of the board voted for a 50 basis point increase. So the likelihood is that we will continue to see more rate hikes in the future. In terms of the data in the US, the Philly Fed index cooled. It dipped to minus 3.3 for July from a previous reading of positive 2.6. We saw US bond yields slide. They initially lost ground with the 10-year yield increasing to a fresh 10-year high at 3.5%. But we saw a little bit of a correction down to below 3.25% later in the session. German bond yields moved higher as well. The 10-year German bond rose above 1.8%. The dollar was hit by a little bit of a correction, which we'll come onto on the charts in a bit. But we did see some attempt at a recovery later on in the session in some of the riskier assets. But all in all, it was a pretty rough day, certainly for equities. So let's get stuck into some charts. Steve, would you like to kick us off this morning?
Yeah, sure. I'll dive into Bitcoin. Bitcoin's had an awful week, as we've seen. We continue to press against the support level, coming in around about $20,000, and no real sign of any recovery of any sort. I think it will take a bit of a concerted effort from a couple of whales, or a little bit of positive news, which I'm sort of like don't really know what catalyst it will be to sort of like to sort of like try and get this to at least retest the 28,800 level. It was such a big support for such a long time. We haven't even sniffed at a retest. It does fill me with a little bit of woe, and I do think that there's as the majority of holders of Bitcoin are actually underwater in terms of valuation. The value of their Bitcoin is below what they paid for it. I think it's only a matter of time before we start to see a little bit of leakage to the downside. So further downside expected for me. Really needs to get above 23,000 to at least sort of like fill me with an ounce, or what's smaller than an ounce. I'm not sure if we can use the word ounce nowadays in case it offends people. Yeah, maybe it just fills me with a Satoshi, a 10 millionth of a Bitcoin full of positive odes. But yeah, don't think we're going to see it. Ethereum hanging about. Obviously, Ethereum is really important because all of the NFTs that people have dived into and are holding. And you'd think with the Ethereum collapsing aggressively, NFT prices might go higher. But funny enough, no one's talking about it, so they're not. That's about it. I've done a sort of like fill you with more woe on the Bitcoin side of things. Let's talk about something a little bit more solid and substantial, like gold, where we had a reaction rally from around about $1,805. That continued yesterday. We got up to 1857, and we've had a bit of a correction lower overnight. So we pulled back about $13-14 from there. We've got this downward channel we're still in. We're trading just around the 21-day moving average. So closed above that yesterday. So that was positive, but we weren't able to follow through to the upside. Resistance above it comes in the form of 1878 to 1880. Above that, we'll have 1900, the obvious psychological level, and above that, 1925. On the downside, obviously, 1805 to 1800 will provide support. Below that, we will retest the 1787 level. So at the moment, gold feels a little bit more positive. But I think with the Fed leading the way, dollar will remain strong and gold will remain slightly pressured by that dollar strength. But remember, it is a bit of a solid thing rather than a bit of paper or just a bit of virtual nothingness. On the other side of things, talking about more solid, but a little bit more liquid solid, is oil. That's been obviously on a bull run. We've had a pullback over the last 3 or 4 days. Yesterday we did get down to the lowest we've been for a while. We got down to the 110.44. Now we've talked about the support we had around about 110 from the lows of the 2nd of June. Also, we've got this previous downward trending resistance line, which was a triangle formation, which we broke out of, which has been retested already. That will provide a little bit more support down around about the 107.50, 108 level. And on the further support, we should see coming in the form of this bullish channel that we're in, the bottom of the bullish channel coming in at 106. So plenty of support around for crude oil. Again, 21-day moving average. We're trading at it at the moment. That's a positive sign still, although despite the retracement that we've seen over the last week or so. Take a little look at natural gas, because I faded this yesterday, or I sold this yesterday in the guns ahead trade idea. I got stopped out of it. Had a nice spike through. Stop was way too tight. Nice spike through, but it's still got this bearish flag type opportunity, I believe. I think if we do get a break down below 730, then further downside could quickly gather pace. If we go to maybe a daily chart, or maybe look at the weekly chart, and we can see sort of how the volume is very, very much focused a lot lower than this. So we are in sort of pretty much uncharted territory, but you can see these weekly candles on the natural gas. This one is pretty impressive for the bears, and should lead to further follow through negativity next week. 670, 655 to 670 will be the next real line of support in that. But do remember that you know, we have seen higher levels than this. If we go back a few years, go back to 2008, 1430 we were looking at. The measured move target that we've got at the moment, we're looking at 1150. So this could be just a temporary pullback, just a 38.2% fib pullback. But we can see that, you know, the moving average conversion divergence is crossing over, turning negative. So that momentum seems to have been stalled. Seems to have stalled in natural gas. That's it.
Thanks, Steve. Okay, let's move on to FX. A few bits to talk about here. So dollar index, first of all, we saw or heard in the headlines that there was a further correction yesterday, and you can see it there on the chart. Big red candle yesterday, which was pretty ugly looking. Let's get rid of that. But the big story really was in the Swiss franc, because obviously they'd had that surprise move. So there was a lot of strength yesterday in the Swiss franc. So this is the euro versus the Swiss franc. And we can see on the chart that huge red candle that we posted yesterday. We broke through this short-term correction kind of channel or potentially a flag, and also took out this previous support here at 102.18. So look set for lower prices on that following that move yesterday. If we take a look at sterling versus the Swiss franc, this was trading in a range for some time. We've now seen a big convincing break lower from that, and lower prices look likely in line with the dominant trend. New Zealand dollar versus a Swiss franc, again, more selling. Looks as though it's going to approach these lows that we posted back at the end of January early this year. And if we look at the dollar versus the Swiss franc, we can see a really horrible looking candle there. So we saw dollar weakness yesterday combined with strength in the Swiss franc, and that created a very large move indeed. So overall, the trend still remains pretty positive, but we're eyeing up this support now at 94.72, I believe, as a potential target to think about maybe speculating on the long side again. The other thing I wanted to point out was on euro US dollar, potential here for a double bottom to take shape. This is the daily chart. Very early call on this, but just we're starting to see prices round off a little bit at these lows. And we've got two bottoms here that we've highlighted with the blue arrows. In order to complete this pattern, it would need to break above these highs up here, which is the underside, which is also a 38.2% fib level. So a 107.86 is the level to watch. That's on the daily chart. If that breaks, then we could see further relief on the euro versus the US dollar. Moving on to indices, another big down day yesterday. I'm going to take a quick look at the FTSE 100 to start with. That broke down through some key Fibonacci levels, pretty much sliced through the 61.8% without any issues whatsoever. We've had a small attempt at a rally overnight in the futures and into the early part of trade this morning, but that seems to have been rejected already, which isn't a good sign. I think these weekly candles coming into obviously trading on Friday, and we get the close of these weekly candles, they could be all important. I mean, that looks pretty horrible. But I think it doesn't look as bad as what we're seeing on maybe the US market. So this is the S&P 500. We talked about this head and shoulders top pattern, which has played out very nicely. Big breakdown through the 38.2% fib level on the weekly chart on the S&P 500, and now fast approaching that 50% level, which comes in at 3,500. I've got a measured move target of all the threes from this head and shoulders top pattern. So I think in this kind of range, we'd be looking potentially at an opportunity to speculate on the long side. I don't believe it'll fall forever. I do think, as we've seen in many times in the past, buyers are very keen to buy this market when it does have some pretty aggressive sell-off. So in this kind of range, I'm thinking that we could start to think about maybe starting to buy a few big names in the US. On the Nasdaq side of things, similar situation. We've actually gapped through the 50% Fibonacci level on the weekly chart. We still haven't filled that gap, so that is still potentially looming and may attract some interest, but looks like lower prices are set to occur here. 61.8% fib level at 10,500 is the level to target for me over the short to medium term. And the thing is, these sell-offs happen tend to happen very quickly. So I wouldn't be surprised if we get there sooner rather than later on that market. But I think that would probably be an area, again, to consider some speculative longs. That's it for me to round up the week on FX and indices. Jamie, do you want to talk us through some stocks?
Yeah, I would love to. Thank you, Joe. Right, here we go. So, starting off as usual with our biggest gainer and loser. Our biggest gainer for yesterday was ADN, Advent Technologies, up 243.97%. Let's check out why. Here we go. ADN more than tripled in value after Greek authorities approved a 782 million euro in funding for the company's green hypo project. So yeah, that is why we saw such a huge move there. 243%, pretty solid. Checking in on Sidey, we looked at this yesterday. This was the one that got awarded that NASA contract. So it was up obviously huge on the previous day, and it's gapped up again another 63% on yesterday's trading. So from trading at $1.44 2 days ago to now closing at $7.63. So a pretty nice move there on the back of that news. Our daily box check-in down another 8%. I mean, there's nothing really more to say. We'll just keep on seeing how low this can go. Our biggest loser, though, will be EBIX, 37.65% down on the day. Let's have a look. Well, I did check this out this morning. EBIX late Thursday dismissed accusations of accounting irregularities by EBIX Cash subsidiary in India. So some problems there. This actually was at had a nice little kind of range-bound action, but has quite conclusively gapped through that, and now we're down near its COVID lows. So a pretty rough time there on the back of that news. We'll check out the stock heat map for yesterday, and it was a pretty bad day, as Joe already alluded to, when we checked out the indices. Red across the board, pretty large moves down. Apple, have a look at in a sec, was almost down 4%. Amazon almost down 4%, Google down 3.5%. And this has been the story of the last kind of week or two, really. It's been pretty much every day we've come and check out this map. We've seen these big names down 2, 3, 4, 5%. So there doesn't seem to be much stopping in sight. But we'll check out some of the individual names now. Let's see which ones I've got listed. We'll start off with Apple. We did bring this up earlier on in the week, but this is a pretty key level here, this 38.2% Fibonacci retracement. It looks like we're going to be closing through that depending on how today trades. This is obviously a weekly chart, so we'll bring out another fib. I think the next level for me on Apple would be this 50% fib level. We've got some previous buys stepping in here at this kind of 117.50 level, which is, I mean, it's not too far away. And as we've said a few times now, that kind of a pullback it's not that huge. I mean, I think it's obviously been a relatively aggressive sell-off we've had, but if we kind of take it from the highs, we're only down 27%, which obviously isn't ideal, and a pullback to the 50% would be a 34% move. So that wouldn't be awful, but I do think there's certainly scope for more selling in Apple. I think these levels wouldn't be potentially a bad point to have a speculative long, and failing that, the 61.8% fib is at 102, so you get the psychological level of $100 coming in there as well, so perhaps some more buyers waiting there. We'll have a quick look at Airbnb, and this is one we haven't looked at for a couple of weeks, I don't think, but last time we did, we were trading in this nice range, and I think actually last time we did, we'd just seen it break through, and that breakthrough has now followed through a bit more, because we are down pretty heavy. If we go down to a daily chart on it, we had a bit of a rally, but then along with the rest of the indices, really, there was these kind of 3 gaps down, another gap down yesterday, and we're now trading at 93.26. No technical support down here at all because the IPO was a lot higher. We've never traded at this level, so I think we could be looking, if we take a measured move target for this channel pattern, so you take the resistance to the support, from a measured move perspective, about $80 looks to be the target. I think this could go lower. Like I said, there's not really any support down here at all, so we'd have to start forming a double bottom or something like that to convince me that perhaps there is a turnaround here, but not looking so hot. AMD, I just wanted to touch on. This has been hit pretty hard over the last week or so. For those that are looking at AMD and like it, I think the next level that we're going to be testing, if we zoom out here, we've had this, I mean, a really extended move up since 2016. I think the next level where buyers will come in is this. Let me draw it on and get my horizontal ray. Around these levels here, 73.85. I think that's probably where we're looking at the very least, actually. This certainly has scope to move lower as well, I believe. If we take out, let's try and get a fib out from the low to the high on the weekly chart. So we'll take it from the low all the way up. There we go. So we're at the, so that would also coincide. Oh no, it wouldn't. That's a different color. 61.8 fib is at $63. So I think that's got room to move. Certainly down to this line of support here. I should have made it green. That would have made it a bit more obvious. But perhaps even down to 61.8 fib or lower. A couple more Meta. We looked at it because we saw that price was kind of contracting in this symmetrical triangle style pattern. We had this breakthrough on the 10th of June. Nothing too crazy on the volume, but yeah, this breakthrough on the 10th of June, and we've had extended selling from there. More room to the downside. I think we could be testing these like $150. I think that's where the next real support comes in for me. We'll fly through a couple more. MU we've looked at a few times. It had this big double top pattern here. This is a weekly chart we're looking at, with the measured move coming down to this $46 level. I think that looks pretty likely to be hit. Maybe not in the next week or two, but I'd expect to see maybe a bit of consolidation, a bit of profit taken around here, and then a bit more of a sell-off down to those lower levels. What else should we check out? Pfizer is now at a pretty important-ish short-term support, this blue line here. Bit range bound at the moment. You can see buyers are trying to defend it. But with this kind of price action, I think that the likelihood is that we will see a break of this eventually, opening up these lower levels down here. We could really look at all of these, but we will finish on... What should we finish on? I like Cineworld. This had a nice descending triangle continuation and then a retest. That was quite a nice technical trade for anyone that saw that. IAG. We looked at this one in a bit more detail recently. When I looked at it, I noted that price was really struggling to rebound from this support. It's that thing I always say about when it hits support level, I do want to see the buyers come in quite quickly, but they really struggled to get a hold of this. It looked good for a while, but then, yeah, the sell-offs happened again. And for me, we're looking perhaps towards these support levels down here eventually at about 90 pence. So, yeah, it's been a pretty bad week all round for stocks, and I don't think there's going to be too much respite anytime soon.
Thanks, Jamie.
Nicely done, mate. Okay, let's now look at the daily challenge that we do, which is the gun to the head trades. So each day we pick a trade live on the video without giving it too much thought really, but we just pick some decent technical levels that we like. We wrap it up in a nice sort of risk managed way. So we've got stops and targets and everything, always looking for at least 2 to 1, if not better. All the ideas are placed at market, and if you want to track how these ideas do, then you can follow our TradingView profile where all of them currently reside. You can see them there. So just a quick look at the ideas from yesterday. So Jamie, you looked at dollar versus the Turkish lira, and it was pretty sideways from what I can see. Didn't get stopped out. You was actually small on side on that at the close of play. So that is absolutely fine. Nothing wrong with that whatsoever. Steve and I, unfortunately, were stopped out. Steve talked about his idea here, playing for a bearish flag. Just a bit too tight on the stop loss, but overall looks to have been a pretty solid idea. And I was short of Aussie CAD, which just didn't work at all. It was stopped out. Obviously, lots of volatility in FX yesterday, which didn't work out in my favour with that one. So 3 new trade ideas today that we're going to come up with. I've got one ready to go. So shall I
Go for it.
Step up? Okay, I'm looking at Euro US dollar. So I talked about this on the daily chart. Put the weekly up there. Let's just put up the daily. So obviously pretty horrific, really, Euro US dollar, due to the strength that we've seen in the dollar overall, and obviously combined weakness with the euro. Potential here for a double bottom to take shape. It's got a lot of work to do before it does do that. In order to complete that double bottom, it would need to break above those highs there at 107.86. But I'm going to speculate on that because I think there is decent risk reward to be had on this one. I also like what I'm seeing on the intraday chart. So this is the hourly chart now that we've got here. Looks as though price is starting to round off a little bit over the last few hours. We've seen a break up through these resistance levels here at 104.94, potentially forming a bit of a bullish flag here in the very short term. If we look at the candle over the last 24 minutes since 8 o'clock, it's maybe looking as though it's going to start engulfing the previous hour worth of losses. So for me, there's fantastic risk reward on offer here. If we call this one right, and this is the pattern that we believe it could be. So buying it at the moment at 105.15. Very tight stop loss, because if it goes below these support levels here, it would invalidate the view that I've got. So that will be a stop at 104.90. And if we take a measured move from what I'm calling here potentially a bullish flag, so from the lows of the flag pole to the high and then projected higher, that comes in at 107.35, which gives me an 8.85 risk reward ratio on that trade today. So obviously that'd be pretty special if it pays out. but you've got to be in it to win it. And I like what I'm seeing here in the very short term. So I'm going to go with that today.
Nice one.
Yeah, I
Who
like
wants to
that.
go next?
Nice.
I'm happy to go next. I'm looking at crude oil. Just really picking up on what the price action over the last couple of days. Yesterday formed a bullish hammer after the sell-off from the 121.30 swing high. We're just edging our way back above the 21-day moving average. So this is a positive. This could be like a morning star formation on the daily chart. Looking at the 4-hour chart, saw a nice bullish outside candle at 3 o'clock yesterday and forming a bit of a bullish flag really on the short-term chart. If we go back to what we talked about earlier in the week, we saw this potential for a double bottom. The measured move target was down at 109.70. It stalled just in front of there, 110.27. So for me, that's done enough on the downside. So looking at really price action, really, if we can get above 115.50, then I think this will be positive. So I'm going to buy at current levels, targeting a move and pulling the stop in a little bit also. So the low there, 113.49, I'll put the stop at the low. That gives me decent 3.45 to 1 risk reward. Looking to buy at 115.15, targeting 120.61 with a stop at 113.49. That's a WTI crude oil.
Nice one, Steve. Over to you, Jamie.
Good stuff. Right, I am looking at the Hang Seng today. Let me add it to the stream. Here we go. What I'm seeing here, general weakness in indices. We're seeing on a 4-hour chart a lower high post on the Hang Seng, and we're trying to test this level. We've had this doji style candle form here on the 4-hour chart, which suggests to me that there's some indecision and perhaps the move lower is going to continue. We also got in this really horrible yellow color. Let's change that. This 50% Fibonacci level, which we've tagged and found a bit of resistance at. Combined with this previous resistance level, that's enough for me to try and get short there. So we're going to look to sell the Hang Seng at current price of 21.082. There we go. Let me change that. Take profit is going to be at these lows down here. So take profit will be at 25.97. And the stop loss will be just above this recent high. It's quite an aggressive trade. Stop loss at 21.195. This gives us a nice 4.29 risk reward if that one does pay off today.
Lovely.
Just before we move on, someone's asked about dollar CAD on the stream. So we'll just have a quick look at that as we want to help people out where we can and offer some views where possible. So this is the dollar CAD daily chart. As you can see, it was trading in a pretty horrible downtrend for a long time. But in more recent months, we've seen prices move sideways. We are trying to break higher. We did see a breakout here back in May, but it failed to hold. And then we saw prices slip off again. But we're approaching those resistance levels again. So if we can get above that level there, which we've got tagged at 130.76, then there's a lot of fresh air for this to move into on the upside. So we'll be targeting as a first step the 50% Fibonacci level, which comes in at 133.40, and above that the 61.8 at 136.53. I'm pretty bullish on this overall, to be totally honest. I think it looks quite strong. If we take a look at some intraday charts just to verify that, this is the 4-hour. We can see a really nice move higher. We did see a bit of a wonky looking candle posted there on the 15th around 6 o'clock, but we are threatening these highs again, and I think there is potential for higher prices on this one, but I'm not sure I'll be buying it right at this moment. I'd ideally want to be looking at opportunities on a dip, but overall I still think the outlook looks pretty good on this one, both on a short and medium term basis. Any other questions on there, or are we all good?
No, all good on there.
Yeah, it's good.
Happy days. Okay, right. So just to finish up then for the week, let's take a look at what data is due out today, and maybe a little bit of a look at what's out next week. So 3:30 today UK time, we've got the Bank of England Peel speech. He will be obviously addressing what happened yesterday in terms of rate hikes, future rate hikes, and plans on monetary policy for the UK. Next week, we've got a couple of key events to look out for, most notably the UK inflation number, which is due out on the 22nd. And then we've got Fed Chair Powell congressional testimony on the same day. So more indications potentially about the plans for monetary policy in the US and what they'll be doing with rate hikes. So that is that, gentlemen, I believe.
Nice one.
Have
a good weekend, everyone.
Week. Yeah. Enjoy the weather in the UK if you're from the UK or wherever you're from. And yeah.
Factor 50.
Factor 50, yes. That's absolutely for sure. Right. Okay. Thanks, everybody. Have a great weekend. See you Monday.
Cheers.
Bye-bye.